Alright, time is up. I'm gonna start the live stream. A second. Because right now I put the poster out there, so I'm gonna start everything really quick. Okay, I am going to. Alright, I think the audiences can see us from the Twitter side and also HTX app and also YouTube channel. Yeah, it's working. Alright, perfect. So we are streaming right now and I am going to open my camera and get the poster, remove the poster so everyone can see us. Oh wow. Okay. So you guys can see that pic. Okay, so I'm gonna start everything. Well, I don't know why I'm kind of nervous, but I am not used to have this feeling. That's weird. But hi guys, and good evening, good morning, or good afternoon, and welcome back to another episode of HTX Live or HTX Talk. And today, as you guys can see from the poster, our topic is about liquidity tightening and US stock correction. Is crypto entering a new cycle? And this is your host Ruth from HTX Live. And thank you everyone joining us. And today we have 4 speakers, and also right now we have more than 3,000 audiences with us right now at the moment. Really appreciate you guys. And also you guys can see this live stream from HTX Global official Twitter and also HTX YouTube channel as well. But we only our USDT airdrop only in our HTX app, so feel free to go to check out and grab some, okay? And stay tuned. So let's get started everything. Since I already mentioned the topic earlier, over the past few weeks, I'm not sure if you guys feeling the market has become much more complicated a little bit, because not just crypto market, if we look at the US stocks and US stocks have some, have come under pressure because oil prices have moved higher, and also inflation concerns are back, of course, and also rate cut expectation have become less certain, and at the same time Bitcoin has pulled back from recent highs, and also Ethereum remains relatively weak, and also the broader crypto market is once again facing a big question. So are we just seeing a temporary correction, or are we entering a very different phase of the cycle? So that's exactly what we want to unpack today. So we are gonna look at this from 5 angles, no matter microeconomics or liquidities or Bitcoin support level or border market structure, or even Ethereum's relatively weakness. So whether you guys are trading, I know a lot of people are trading
离的
short
这次
term.
是搞一个阴谋，就让他让大兵脱险。
Okay, sorry. So whether I know a lot of you guys are trading short terms, but also we have a lot of people investing like Bitcoin, Ethereum for long term, or just trying to make sense of where this market is heading next. I believe our lab should give you a clear framework, or also that's our main goal. And before we begin everything, I'm gonna let our guests to have like a self-introduction. So first, I'm gonna invite Feta to say hello to our audiences. Hi, Feta, glad to have you back.
Hi, everyone. Nice to see you again. It's been a while. Thank you, Ruth, for having me. Thank you for everyone watching us for taking the time. to join us tonight. I am Fedler Rifai. I'm the Chief Business Development Officer of NI28. NI28 is a real-world asset protocol built around one of the most important industrial resources in the global economy, which is nickel. We connect licensed mining operations with on-chain verifications, allowing real production, reserves, and asset data to be represented in a transparent and structured way on the blockchain. And rather than chasing the short-term narratives at NI28, we're focusing on something long-term and has long-term value with clear standards and responsible growth, and positioning ourselves as infrastructure for the next stage of Web3, where real assets, compliance, and global participation come together. And since I've last been here, guys, we've been very busy. We have been doing a lot of improvements on our architecture. We launched our phase 2. Our CertiK rating is improving, and our community is expanding to be bigger than ever before. And of course, we are preparing for the Bali Blockchain Week this coming May. Please stay with us until the end of this AMA session. I have some exciting opportunity for all of you at the end of the session. Back to you, Ruth.
All right, I really appreciate Feda. So yeah, recently, especially April, we have a lot of events going on, in Indonesia, Bali, and also May. So if you guys want to, join those offline events, feel free to check out. All right, so let's invite Ethan. Hello, Ethan. Hi, it's your turn.
For having me. I am Ethan Petrov. We're currently witnessing a fundamental shift from an internet of information to an AI native internet, what we call Web 4.0, where intelligence itself is the core primitive. At CyberElita, we've developed the first self-evolving super agent framework. Our mission is to move away from centralized tool-like assistance toward persistent digital entities that users actually own. In a market where liquidity is tightening, we believe intelligence becomes the ultimate form of capital. Thanks, Hoster.
Wow, is that AI? Oh, very standard accent. Okay, thank you, Ethan. Next, let's invite Leo. Hello.
Hi everyone, this is Leo Park from the WGA project. I'm very happy to join here tonight again. At WGA, we focus on behavioral data, quality, and participation credibility. As RWA moves from narrative to real adoption, keeping data trustworthy is our main mission. Back to host.
All right. I think a lot of audiences are already familiar with Leo because he's been with us a couple of times before. So all right, I think that's it for our guests' introduction. And so let's get everything started. So first the question is actually about the star correction and also the crypto correlation. Because recently the Nasdaq has fallen for like a full week, and also risk sentiment in traditional markets has clearly weakened. So our first question is this just a short-term pullback, or are we looking at broader trend reversal? Because would you guys describe this as a healthy correction, or could it be the early stage of a bear market in equities? And also I think more importantly for our audiences here is, if US stocks fall further, does crypto inevitably get dragged down as well? Or do you think Bitcoin and the broader crypto market now have more room to decouple than before? Because we used to see there is a very, very close relation between Bitcoin and US stocks. So also when we look back historically, how has Bitcoin usually behaved during major US stock corrections? I'm not sure if you guys are familiar with US stock. What about you, Feda? How do you think of this one? You didn't open your microphone?
Okay, yeah. Okay, so actually I think at this stage, the Nasdaq recent decline, it looks more like a short-term correction than a full trend reversal. After a strong run, markets typically need to reset positioning and valuation, especially in a tighter liquidity environment, especially with what's happening in the world right now. So crypto, and particularly Bitcoin, has become increasingly correlated with US equities during the period of macro uncertainty. So if the equities continue to decline, crypto is likely to feel the pressure in the short term. And historically, we've seen this both in 2020 and 2022, where Bitcoin initially moved in line with equities during the risk-off phases. However, over longer periods, Bitcoin has shown the ability to recover faster and eventually decouple, especially once the liquidity conditions stabilize. But the effect of what's happening right now, I think, is going to take a while for the market in general to recover. And what we have been seeing, especially recently, well, in previous years, normally when gold goes up, Bitcoin goes up. When it goes down, Bitcoin goes down. But this time it's different. So yeah, back to yours.
All right. Thank you, Fada. So, okay. What about you, Ethan? How do you think of U.S. stock? And also
Nasdaq
Bitcoin?
slide this week isn't happening in a vacuum. We're seeing a significant de-risking phase as the market reevaluates the premium on growth stocks. Whether this is a healthy correction or a bear market depends on the 18,000 level for the Nasdaq 100. Historically, crypto has been the high beta twin of tech. During the 2022 bear market, the Nasdaq lost 33% of its value, and Bitcoin crashed in tandem, losing nearly 65% that year. The panic correlation, even further back during the 2020 COVID crash, Bitcoin initially plummeted roughly 50% in a single 24-hour window, alongside a 12% drop in the S&P 500. If we see a deeper equity drop now, expect crypto to follow the downward gravity until the initial margin call selling exhausts itself.
Okay, thank you, Ethan. Also, yeah, what about you, Leo? How do you think of this one?
Okay, I think what we are seeing right now looks more like a short-term correction than a confirmed trend reversal. The Nasdaq had a very strong run before this, so some cooling is completely normal. At the same time, crypto and US tech stocks have been more closely linked in recent years, especially when global liquidity gets tighter. When the stock market struggles, people often sell their crypto to avoid losing more money. But Bitcoin has one special pattern. It's more sensitive than the stock market, so it drops hard but also jumps back up quickly. In the past, when US stocks fell, Bitcoin usually went down with them in the beginning. But once leverage was cleared out and long-term buyers stepped in, it often stabilized earlier than expected. I believe a big stock market crash might push crypto down for a while, but it won't stop the overall crypto trend. That's my opinion. Back to hosts.
All right, thank you, Leo. So yeah, like you guys said, this is like a short-term, like transition part, because this question actually give us a good starting point on cross-market correlation, and also yeah, but stocks are only one part of the story. Another major concern right now is it's actually inflation and rates. So that's why we are going to talk about the second topic. It's about the oil, the inflation rates, and also liquidity. Because if you pay attention to the stock markets, you must pay attention to the oil price as well. Because oil moving above $100 has brought inflation fears back into the market conversation. So the question here is, if oil remains elevated, does that increase the chance that the Fed keeps rates higher or longer? Could this delay rate cuts even further? And if we do stay in a high rate environment, what does that mean for crypto? So yeah, also for a long time, crypto has been seen as a liquidity sensitive market. So do you guys think crypto is mainly driven by global liquidity conditions as well, or are there any new stronger eternal drivers in the market that can offset micro pressure as well? So still, I'm gonna invite Feda to share a little bit. Do you see oil price?
I do. Thankfully, in Malaysia, we're not feeling it that much yet.
Yes, yes, I know. Also, one
Yes.
more question. Why? I don't know. I think like Thailand, Indonesia, not sure about Singapore. The oil price is not that high compared to other countries or my country.
Actually, in Thailand and the Philippines, the price is going up. Um, Actually, a lot more. I think I heard more than 500 petrol stations in Philippines are already out of petrol. A lot of people are walking to work. There is a big travel advisory not to go to Thailand because of the fuel shortage. We are feeling it a little bit here. I don't know if you heard of the company called Farm Fresh. It's the biggest dairy products supplier in Malaysia. Well, they're out of materials to make the plastic packaging for their milk bottles. So we are feeling it. The government in Malaysia, they have subsidies to control the price, but that's not gonna stay for long. So, but in Malaysia, we are still having crazy traffic every single day, so we are yet to feel the pressure. But the prices of everything will be increasing, like oil. So, to answer your question, oil moving above $100 add inflationary pressure, which makes it more likely that the Federal Reserve in the States will keep the interest rates higher for a longer period of time. So, high rate environment generally means tighter liquidity,
Yes.
lower risk, and of course, lower risk appetite for investors and traders. So, and it also result in reduced capital flows into risk assets like crypto. So, in the short to medium term, crypto remains largely liquidity driven. So, when liquidity tightens, we typically see slower institutional flows, reduced leverage, and more cautious market behavior. That being said, the market is evolving. With the growth of institutional participation in the crypto market and emerging sectors like us, like real world assets, crypto is gradually moving toward a more utility and value driven ecosystem. No longer like I've always been saying since the last time I was here. People are moving away from meme coins. They're moving away from short term gains. They're looking for more something longer term and lower risk. So any ecosystem that has that will have a better performance in general. But in general, the crypto market is still heavily influenced by macro liquidity cycles.
Yes.
That's
Yeah.
so. I don't know how you're doing with your Ethereum. It has been a while since we caught up.
I have nothing to do honestly because that's how a wrong decision costs. It's have a way more um, negative emotion and also effects that I thought, and also that's why I quit trading for a very long time. But recently I started doing this short things again. So I don't know. I just trying to. Sometimes I try to trade to feel the market, to feel the emotion, to learn. So
Mm.
yeah, I try to learn something from actually trading and try to write down my experience and try to learn. Also, we have HTX have this team called research team, and they are the only thing they do is study the market. And also they have very strong background of microeconomy as well. So they will we have this little group and they will share a lot of their opinions toward the market, and I learned a lot from the lesson they gave to me, and also I trade a lot to feel the market. So yeah, I think I am being more mature than before, at least. So and also I host a lot of space and live streams, so I can hear a lot of people's opinions, like you and other guests. So it's an interesting journey. Yeah. So what about you, Ethan? How do you think of this one, the oil price one?
Hovering above $100 is a structural headwind that the Fed cannot simply interest rate away. It's an inflationary tax on everything. The market is now pricing in a higher for longer baseline. During the 1970s inflation era, the Fed was forced to keep rates restrictive for a decade to break sticky, energy-driven inflation. High rates are the natural enemy of liquidity-driven assets like crypto. They increase the cost of carry and suck the speculative oxygen out of the room. In this environment, the speed of your intelligence is your only edge. This is why we built Alita Signal. It functions as a sensory system that processes massive real-time data streams, like oil spikes or geopolitical shifts, transforming raw macro chaos into actionable insights, so the system stays situationally aware.
Oh wow. Yeah, that's what I said. Right now, the AI plus Web3 are the main thing, and we'll appreciate Ethan for your answer. So, what about you, Leo? How do you think of this one?
Okay, higher oil prices usually mean higher inflation expectations. And when inflation stays sticky, it becomes harder for the Fed to cut rates quickly. So yes, a higher rate environment can stay with us for longer than people expect. For crypto, that matters a lot. When rates stay high, liquidity usually get tighter. And when liquidity is tighter, risk assets tend to struggle. The crypto market still follows the flow of a global money. When liquidity expands, crypto usually does well. When there is less money moving in the market, everything slows down and prices stay in a tight range. That said, crypto today is not the same as in earlier cycles.
Yeah.
We now have new powerful reasons for growth like ETF money, big companies joining in, and people holding for the long term. Higher rates might make the market move slower, but they don't have to be the end of this cycle. Okay, back to host.
All right. Thank you, Leo. So yeah, well, high oil matters because it can delay rate cuts, and if this oil price remain above like 100 for long enough, the market may start to price in a more persistent inflation problem as well. And also, if inflation becomes stickier again, the Fed had less room to cut rates quickly, and so even if we don't get a new hikes, the higher for longer narrative itself can really be a headwind for crypto as well. All right, so yeah, for the oil price, I don't know. I have electronic car, so it's been a long time. I pay attention to the oil price of my country, but when I travel to Thailand or Indonesia, I find people are use motorcycle a lot, but the oil price are way much lower than my country. So that's also Feda you mentioned a little bit, and yeah, that's make more sense. Okay, so all right, let's move on to the next one. So let's talk about Bitcoin a little bit, because we talk about microeconomy and also the oil price, and Bitcoin has fallen from, I'm gonna check the price right now. Six 66, okay. Has fallen from around 62,000 to the 65,000 area. Right now it's about 66. a little bit rebound, and also the market is increasingly debating whether this is a key make or a break level. So the next question is actually about Bitcoin. Is the 65,000 a major support level for Bitcoin right now? This is really important because I am going to open a position maybe at the end of the live stream. So if that level falls, how realistic it's a move to 60,000 or even 50,000? So some people are also pointing to the possibility of 6 straight monthly losses, which would be quite rare historically. So how should we interpret this kind of price action? Is this signaling a deeper structural weakness or simply a painful but normal reset within a border cycle? Still back to you, Feda. How do you think of Bitcoin right now?
Well, if you remember the last time I talked about Bitcoin, I gave my own personal opinion of Bitcoin, and it's very controversial. Yes, Bitcoin is the cornerstone of the blockchain industry right now, or the trading, because it's the biggest asset out there. But I still do think after some period of time, I don't know how long it will be, it will not be as important in the market as it is today. However, talking about today, the 65K level is an important psychological and technical area. But it should not be viewed as a guaranteed floor, because the market and the situation in general is very unpredictable right now. Because we know now a little bit what would happen if there is some minor, let's call it a scuffle or some little war happening. But if it goes into something on a much bigger scale, then there's no telling what will happen in the market. So if that level breaks with strong momentum, the next logical support sits around 60K. And in a more risk-off macro environment, move toward 50K gonna be rolled out. So I'm not giving anything.
Financial advice.
I'm not giving any financial advice. I'm just telling you how I think personally. However, what's notable about the current market is that the correction has been relatively controlled compared to the previous cycles.
Yes.
Okay, it's a little bit more predictable. Okay, and there's still underlying spot demand supporting the price levels. So this suggests that we are not seeing panic or capitulation, but rather than a measured correction with a broader cycle, which is generally a healthier market dynamic. And like justly you said, the crypto market today is not the same as it was last year. It's not the same as it was a couple of years ago. Mm-hmm. So again, we're not giving any financial advice, but I would just tell everyone to be a little bit more careful, not to, as always, not to listen to the noise too much, and to do their study. Do your own research. That's the most important thing.
Yes, okay. What about Leo? How do you think this one, Leo? Do you trade? I think you do trade.
Yeah, the $65,000 area is an important level. Yeah, it is both psychological and technical. It's a level where many institutions enter the market, so they will likely want to protect it. So yes, the market is clearly watching that level. If Bitcoin loses $65,000, the next level trader usually watch around $60,000. And then default liquidity in the $55,000 to $50,000 range. But I think we also need to step back and look at the bigger picture. Right now, on-chain data does not show aggressive selling from long-term holders. And leverage in the market has already been reduced a lot. This looks like the market is just clearing out risk bets, not starting a long-term crash. So yeah, $65,000 matters a lot, but the market is not automatically broken if it tests lower levels. Yes, that's my opinion. Back to host.
Yeah, right now, yeah, yeah, 66. It's a very fierce battle between short and long right now. Okay, what about you, Ethan? How do you think of this one?
Bitcoin testing $65,000 after 6 straight monthly losses is a rare and bruising streak of bearish momentum. Technically, $65,000 is the line in the sand. For historical context, the $60,000 to $64,000 range was a major psychological and technical brick wall throughout 2021. If this breaks on high volume, the next structural safety net is $52,000, which serve as a foundational accumulation zone in early 2024. While a 30% drop from $72,000 feels like a disaster, it's actually standard bull market behavior. In the legendary 2017 run, Bitcoin saw multiple 30 to 40% drawdowns before reaching its peak. The mid-cycle flush is a feature of the market, not a bug.
Yes, because we have Chinese Twitter space yesterday as well. A lot of people think, yeah, it is undoubtable that we are at the bear market right now. So it's not the bottom yet. So there is a very big chance the price keep going down. But still interesting point, the institutional side, the ETF flows out, but also major institution from Wall Street, they still they have this plan to buy in after each fall, the price going down, so they still keep buying it. So I think the price gonna be, I'm not sure. I don't know. I'm still I feel confused as well. So but yeah, anyway, thank you guys for the answering. All right, so let's continue to the third question. So we talk about the price, we talk about Bitcoin, we talk about micro side, and also like I mentioned earlier, it's not maybe it's not at the bottom yet. So the question is bottom or mid-cycle correction, because right now the market feel very split. On the bearish side, so we have higher oil, sticky rates, and also geopolitical tensions. Iran is not over yet, and also relatively weak on-chain data. And also on the bullish side, we also see sign of spot buying, like I mentioned. There are still institutions are keep buying, and also short squeezes, and also the argument that a lot of deleveraging may already be behind us. So the big question is, are we looking at market bottom here, or this is simply a mid-cycle correction? And for those who have been through previous cycles, so does the current setup resemble the 2022 bottom in any meaning way? 2022 is not DeFi summer, or is this a very different kind of market environment? So how do you see the market right now, Feda? In the middle of already far away from the bottom?
Well, the current market looks more like a mid-cycle correction rather than a cycle bottom. Okay, so there are clearly bearish factors, including the high interest rates, the elevated oil prices, the geopolitical tensions, and of course the weaker short-term on-chain signals. But at the same time, there are also strong bullish elements, such as continued spot accumulation, reduced leverage, and ongoing institutional involvement. Compared to 2022, the key difference is that the market today is structurally stronger, fewer systemic risks, and less excessive leverage. And I think the most important difference than the market in 2022 is that the behavior of the traders and the investors. Because if you see, a lot more people are getting properly educated about what's happening. There are much less running after the hypes.
Yes.
There's also some people that I personally know that are heavily invested in meme coins and short-term stuff are tired and they want something low risk, long term. Just put the money and sit back and
I
relax.
totally.
Okay.
Okay.
So in 2022, we saw major collapses that fundamentally reset the market. We might see some again this time around, whereas now we're seeing, but in general, we're seeing a lot more macro-driven slowdowns. So this suggests a reset within the ongoing cycle rather than the end of a cycle. Back to you.
Yes, yeah. I think yeah. Also, one important thing is back the days we have a lot of new narratives, so we have more choice. So we trade meme a lot, crazy.
Yeah.
But
Yeah.
if we look at the market right now, the crypto market is it's lack of new narratives. We are so tired of um, unreal or useful narratives. What we need is like RWA or the narratives that can actually solve problem, not just a hype, not just short-term trends. So I think more people are aware of that. That's why the AI are the trend right now. Okay, what about you, Ethan? How do you think of this one?
Market is split because 2026 doesn't look like 2022. 2022 was about the structural failure of centralized crypto giants like FTX and Celsius. 2026 is about macro exhaustion. We are likely in a mid-cycle correction fueled by geopolitics and oil rather than an internal crypto collapse. The bullish silver lining is that deleveraging is mostly done. The weak hands have already been shaken out. We believe we are transitioning into the personality economy, where an individual's decision-making patterns are transformed into digital assets. In Web 4.0, your AI agent isn't just a chatbot. It's a form of productive capital that accumulates value alongside your experience. While the macro tape looks ugly, the utility of collective intelligence networks, where agents collaborate to solve complex problems, is growing independently of the Fed's dot plot.
Okay, thank you, Ethan. What about you, Leo? How do you see this one?
Okay, at the moment, the market is being pulled in two opposite directions by different factors. The market is worried about oil, interest rates, and world news. At the same time, we see strong points like big companies joining in and the market getting cleaner after the recent drop. Compared with 2022, this situation is very different. In 2022, the market suffered from major platform failures and a total lack of cash, leading to a huge shakeout. Current fear is coming from the outside economy, not from internal failure in the crypto world. So, in my view, this is closer to a mid-cycle consolidation than a full market bottom. It may still feel heavy, but it is not the same kind of breakdown that we saw in 2022. Yeah, that's my opinion. Back to host.
Okay, thank you, Leo. Okay. So now we are gonna move to Ethereum. So Ethereum has recently looked much weaker relative to Bitcoin, and ETF flows have reportedly dropped sharply. And so the question is Ethereum now in a structural weak phase, or is this simply a temporary period of underperformance? So some people are even asking whether stablecoins have started to absorb part of the role Ethereum once played in institutional crypto allocation. So has Ethereum been overtaken in importance by other parts of the ecosystem, including stable coins. And also, if we're looking ahead, is Ethereum still the top institutional choice after Bitcoin, or is that assumption starting to change? Talking about Ethereum, I saw a news a couple of days before. I think right now we have like Ethereum earn products. They have like yield from staking Ethereum from I think that's a Web2 products, if I remember that correct. So how do you see this one, Feta?
Well, yes. Since I've gotten to know you, Ruth, sadly, Ethereum has been getting weaker and weaker. But it does not appear to be a structural decline, because last time I spoke about this topic, I was mentioning that you have to separate Ethereum, the coin, and then Ethereum, the utility, where people are still heavily using ERC20 and all the other protocols that Ethereum has. But the drop in ETF inflows is a more reflective of a short-term sentiment and capital rotation, as normally is the case. So particularly toward Bitcoin, rather than a loss of a long-term confidence. I don't think people will lose confidence in Ethereum or move away from Ethereum that easily. I mean, you have not, Ruth. You're still holding on.
Too long. Like it's way too long compared to
But
Bitcoin.
as they know, as the saying goes, good things come for those who wait. And I think, this is the biggest actual trend in the market right now. Actually, being able to wait. So that's why people are moving more towards projects like RWA. So back to the question. While stablecoins have grown significantly, they serve a different role as a liquidity and settlement layer, whereas Ethereum remains as core infrastructure for decentralized applications, tokenizations, and on-chain finance. Okay, so from institutional perspective, Ethereum is still highly relevant, and it will stay like that for a very, very long time. It might even outlast Bitcoin, in my own personal opinion. Okay, so especially in areas like real-world assets and smart contract-based financial products, this looks like more a cyclical underperformance phase, rather than a shift from its long-term position within the ecosystem. So I think you should be assured a little bit at least that Ethereum is here to stay, maybe even longer than Bitcoin. Okay, so yeah, back to you.
Yeah, but I don't know. I don't know how this marketplace, especially. Anyway, all right. Thank you, Feta. What about you, Ethan? How do you think of Ethereum other than Bitcoin?
Ethereum is currently the laggard of the majors, and the 65% drop in ETF interest suggests a massive rotation in institutional sentiment. ETH is in a narrative crisis. In 2021, it was the undisputed DeFi king. In 2024, it was the institutional blue chip. Today, it is being challenged by stablecoins that handle trillions in settlement and faster L1S that have commoditized the network. Institutions are no longer buying the world computer story blindly. They want to see active yield in execution. This is where the Alida Hunter layer becomes critical. It operates as the skill of the system, acting with strategic awareness to perform complex financial and on-chain tasks. By using holographic behavioral cloning, it analyzes the underlying logic of how a user evaluates trade-offs and risks, allowing it to act as an autonomous economic proxy. Whether the ETH narrative is weak or not, the demand for agents that can navigate these decentralized ecosystems to hunt for value is the real growth sector of this cycle.
All right. Yeah, for me, but also one more thing is Ethereum it's really hard to explain in one sentence because it's compared to Bitcoin. We also we I mean everyone can know one thing is Bitcoin has a very clean institutional narrative. It's rare and also it's reserve assets. A lot of institutions from Wall Street buying it and use it as a reserve assets, and also ETF access. That's what we normally explain when we talk about Bitcoin. But Ethereum is it's a little bit complex because it's a smart contract platform. It's technical side, but also it's a settlement layer 2, and also a staking assets, and also it's a base for stable coins or tokenized assets. But this complexity could be powerful, but in cautious market it could also become a disadvantage in some way. So yeah, that's really confused. What about you, Leo? How do you see Ethereum?
Okay, Ethereum is currently falling behind Bitcoin in terms of price performance. We are seeing institutional investor favor Bitcoin more because of the new ETFs. That naturally shifts attention and liquidity toward BTC. At the same time, stablecoins have grown a lot because they are useful during uncertain markets. When prices jump up and down, people often move their money into stablecoins to stay safe. But yeah, that does not mean Ethereum is replaced. Ethereum is still the core infrastructure for DeFi, smart contracts, and many layer 2 ecosystems. From an institutional point of view, Bitcoin is often seen as a macro asset or digital gold. Ethereum is seen more as a technology platform. So yeah, Ethereum can be a bit late to react whenever the big market picture is unclear. But it often does better when the market shifts back toward innovation and risk taking. So overall, Ethereum still plays a central role in the Web3 ecosystem, even if its market cycle moves differently from Bitcoin. Yeah, that's my opinion. Back to host.
All right, thank you, Leo. Yes, for Ethereum, yeah, the ecosystem. I didn't see any like new narratives. Maybe we still need to be more patient. We need more time. But yeah, thank you for everyone's opinions of today's 5 topic. And after this week's live stream in Twitter, I feel like one thing is pretty clear. It's the market is actually being shaped by both micro pressure and also internal, we call it structural shifts. And that means we need to watch more than just price, but also like today's topic, like liquidity, positioning, and also capital flows very closely. And yeah, whether these turn out to be a bottom or a reset, what we call, or start of a new phase, one thing is certain is the next move in crypto definitely will not be driven by a single factor alone. So yeah, I really appreciate Feda, Ethan, and Leo's answer of today's live stream. I believe our audiences learn a lot from today's session. And yeah, before we wrap everything, is there anything you want to share to our audiences?
Actually, yes. This is a bit unannounced and a surprise, unexpected surprise for all of the HTX audience today. I can see we have over 10,000 people watching us right now over Twitter and HTX.
Yes.
All right. So for those of you who have seen me before, they can see that there is, okay, on the other side, sorry.
Yeah,
Okay,
yes,
over here. Okay,
yes.
you can see Bali Blockchain Week and you can see a QR code here. If some of you guys are not able to scan, you can head up to our Twitter, NI28 underscore global, or search for NI28. If you scan this QR code, it will take you to a Google form. You fill out this form and you get a chance to win 2 tickets to Bali Blockchain Week. Bali Blockchain Week is happening on the end of May next month. It's going to be one of the biggest events of the year in the region. Some of the biggest names in the industry will be joining. I'm not able to announce any of the names yet until they confirm. But it will be, I can tell you for a fact that this is the biggest event that I've worked on in my entire life. So it's very exciting. The form is quite simple. I just need your details, email address, your Telegram and Twitter handle, and you need to follow some accounts. And then our team will reach out to the winners. Just to let you know that the ticket is priced around $300 per ticket. So you guys will be winning tickets worth up to 600 US dollars. Okay? So you guys can either try to scan from the screen or go to ni28_global Twitter, and then you can scan the QR code from there. Submit your answers, and we'll reach out to you soon. Thank you, Ruth, for giving us the opportunity to share with everyone today.
All right, thank you, Fada. So if you want to go to Bali Blockchain Week, feel free to go to check it out. And I also zoomed the screen a little bit so you guys can try to scan. And all right, so I think that's it for today's live stream. Once again, thank you, Ethan, Leo, and Fada, joining us, and we will see you the next one. Don't forget to follow HTX live channel, and also stay tuned, and good luck everyone in the market. Okay, so bye guys. Bye bye.
Bye bye, everyone.
Bye bye.
Bye bye.
Bye bye. Have a good night.